Hey everybody, I just wanted to talk a little bit about 10-year rates post-Fed. Now we're a week out. It's been exactly a week since the Fed came out with their interest rate cut, first one of the year. Um, what I'm more interested in is to see what has happened to interest rates since the FOMC. And again, we are back to kind of where we began to break down to approach that 4.0 line. And then once the Fed hit, we bottomed. We traded down to 399 and boom, we've been right back up. So we're right back to 415 on rates, which tells me the market is smarter than President Trump on this one, and I've been saying it for a long time. Interest rates actually need to be higher still. We've got froth everywhere. Trump is focused on a frothy stock market that he just wants it to go up. He thinks that's the way people keep score. But the reality is we need cycles. We need real cycles all the time. And we haven't had a cycle in this market in 17 years. The last time this market sold off was 08 and 9. So we're way overdue. Doesn't mean it's going to happen anytime soon, but there's so many things that could drive this coming sell-off that I believe that we're building into. But what I find interesting is we're basically, everybody's getting excited about interest rates, but I just don't see us going down too much lower, maybe 375. But ultimately, we're just in this bracket 375, 4.5, 46, 475. That's the range we've been in for quite a while, and you can see that in the charts. And what I would like to say is we need to have higher interest rates, and guess what? That won't be. It's tough to take your medicine sometimes, but that's where we are. And the market is telling us that the Fed is wrong and they need to be raising rates. And I'll stay with that. The dollar's actually rising today. We're seeing an uptick in the dollar, which is putting pressure, obviously, on interest rates to the upside, and also on stocks. We finally, for the first time, broke down 3-day range. We're trading at the lows of the week as we limp into the close here. On Wednesday, middle of the week, remember we opened about 6,700 on the S&P, and we're sitting at right around that number, 6690, I think is where we were last I looked. But interest rates is really what I'm focusing on. Bond traders are much bigger and much smarter money than equity traders. So keep an eye on interest rates. It's interesting. They are rising, and I just wanted to point that out to all as we move forward here into the fall months.